The ceasefire was announced on a Tuesday night. By Wednesday morning, the Dow jumped 1,300 points. Oil dropped 16%. Every headline on the planet used the word hope. And someone who placed $580 million in bets against oil prices 15 minutes before the announcement made a fortune. 15 minutes. That is not timing. That is a phone call. Oops. Here is the problem. The celebration lasted 12 hours. The damage will last 12 months. Because a ceasefire is not a solution. It is a pause button on a broken machine. And the machine is still broken. Let's start with what actually happened. On April 8th, 2026, the United States and Iran agreed to a 2-week truce. The war that the US and Israel started 6 weeks earlier was supposed to pause. Pakistan brokered it. Trump called it total and complete victory. Markets exploded upward. For half a day, the world exhaled. Then April 9th happened. Iran's parliamentary speaker said 3 parts of the deal had already been violated. Israel launched its heaviest strikes on Lebanon since the war started. Iran stopped letting ships through the Strait of Hormuz again. 2 days into the ceasefire, a handful of ships got through, out of hundreds waiting. This waterway normally handles 20% of all the oil the world uses every day. A handful is not a reopening. It is a rounding error. Now here is the part that should make you angry. There are 2 prices for oil in the world. The futures price is what traders bet oil will cost tomorrow. The physical price is what you actually pay to get a real barrel delivered to a real refinery today. Before the ceasefire, physical oil hit $144 a barrel. After the ceasefire, futures dropped to about $95. But the physical price? $132. The gap between what Wall Street hopes and what the real world pays has never been wider. Wall Street is pricing in optimism. The gas station is pricing in reality. Guess which one you pay? The exact trigger is debated, but here is what the data shows. Oil is still 40% above pre-war levels. American gas hit $4.12 a gallon this week. In January, it was $2.81. That is a 47% jump in 3 months. Diesel, the fuel that moves every truck that delivers every item to every store you shop at, is averaging $5.43 nationally. California is near $6. And gas prices lag behind crude by 2 to 4 weeks. The worst of early April has not arrived at your pump yet. Let me introduce you to Kenji. 52, runs a small fishing company in Yokohama, Japan. 3 boats, 12 crew members. His office smells like salt and diesel. Always has. Kenji's entire business runs on diesel. Diesel powers the boats. Diesel powers the refrigeration that keeps the catch fresh. Diesel powers the truck that delivers to the market. Japan gets 75% of its oil through the Strait of Hormuz. 75. The Japanese Prime Minister said it out loud. If the strait stays closed, Japan runs out of oil in 8 to 9 months and the economy collapses. That is not commentary. That is the Prime Minister of the world's 4th largest economy saying those words into a microphone. Kenji's diesel cost doubled since February. He used to fill a boat for roughly 300,000 yen. Now it costs over 600,000. He runs 3 boats. The math stopped working 3 weeks ago. 1 boat stays docked now. 4 crew members are home without pay. The fish are still in the ocean. Kenji just cannot afford to go get them. And here is the unlikely connection. Kenji's boat sits in Yokohama because a strait 33 kilometers wide, 9,000 kilometers away, is controlled by a country he has never visited over a war he never voted for. The same ceasefire that made Wall Street pop champagne did not put a single drop of diesel in Kenji's tank. Now zoom out. This is not just Japan. The Philippines declared a national energy emergency. Pakistan and Bangladesh have rolling blackouts. The European Central Bank warned Germany and Italy could fall into recession. Shell warned Europe could face fuel shortages this month. Across the Gulf, losses exceeded $120 billion in 1 month. The ceasefire erased none of it. Oops, now the pushback. The war disrupted supply. The ceasefire is fragile but real. Diplomats are meeting in Islamabad. Give it time. Fair enough. But here is the mechanism question. A ceasefire cannot clear 187 stranded tankers overnight, cannot rebuild pipelines that were struck, cannot restart refineries that shut down, and it cannot convince insurance companies to cover ships through a strait that might close again in 2 weeks. Before the war, insuring a ship through Hormuz cost $200,000. After the strikes, $1 million. Then most insurers canceled entirely. The U.S. created a $40 billion emergency fund. Ships are still not going. The crews will not bet their lives on a ceasefire with a 2-week expiration date. Would you? So who actually won on ceasefire day? Let's follow the money. The Financial Times found that $580 million in bets on falling oil prices were placed just 15 minutes before Trump published his ceasefire statement. 15 minutes. Oil dropped. Those bets printed money. A U.S. congressman has already called for an insider trading investigation. Oops, the market went up. The market went down. The bets paid both ways. And Kenji still cannot fill his boat. BCA Research, one of the most respected strategy firms in the world, said it plainly after the ceasefire. Energy markets will remain on a structurally higher floor regardless of outcome. Because governments everywhere are now hoarding fuel and restocking in case the fighting restarts. The ceasefire did not end the crisis. It added a new layer, panic buying at the national level. Now here is the question this channel exists to ask. Every time a crisis hits, the same pattern repeats. Prices spike. Ordinary people absorb the cost. Then a ceasefire or a deal gets announced. Markets celebrate. Traders cash in. And by the time the dust settles, the price never quite comes back to where it was. The floor moves up. It moved up after the 1973 oil embargo. It moved up after the 2022 Russia-Ukraine shock. And it is moving up now. What if that is not a bug in the system? What if that is the system? What if every crisis is a ratchet that only turns one way? War has never had a winning people. Not on the losing side, not on the winning side. Wall Street made money when oil went up. Wall Street made money when oil came down. Kenji lost a boat either way. 3 things to carry with you. Economic. Oil is still 40% above pre-war levels. The physical price is $132. The strait is functionally closed. 187 tankers are waiting. Insurance is gone. And the ceasefire has a 2-week expiration date. This is not a recovery. This is a commercial break. Social. Kenji docked one of 3 boats. 4 crew members went home. A fishing company in Yokohama is collateral damage of a war in the Persian Gulf. Multiply that by every small business in every country that depends on energy flowing through one 33-kilometer choke point. Global. Someone made $580 million 15 minutes before the ceasefire was announced. A congressman called for an investigation. The market celebrated. And the price of diesel in Yokohama did not move. The system is not broken. The system is working exactly as designed. It is just not designed for you. Kenji checks the fuel price every morning on his phone. The ceasefire was 3 days ago. The price has not moved. His boat sits in the harbor, clean, fueled for one trip. He is waiting for the price to drop. The price is waiting for the strait to open. The strait is waiting for a war to end. And the war is waiting for a deal that both sides already say is broken. 4 things waiting. 1 fisherman standing still. If the ceasefire changed nothing in your daily life, tell me what it looks like where you are. Drop it in the comments. If this changed how you hear the word ceasefire, stick around. We follow the money, not the headlines.